Welcome, everyone, and thank you for joining us. We are very pleased to have Ryan Wilday with us today. Mr. Wilday has over 2 decades of experience trading equities, futures, and options. He began trading cryptocurrencies in 2013, and today he melds his deep knowledge of the cryptocurrency market with Elliott Wave theory. My apologies. In August 2017, Mr. Wilday launched his cryptocurrency trading service on ElliottWaveTrader.net. To our live viewers, please utilize the chat box to type any questions that you may have for Ryan. If time permits, I will announce those questions at the end of his presentation. With that being said, Ryan, welcome back, and the floor is all yours.
Hey, everyone. Thanks again for coming. And today we're going to talk about, has Ethereum bottomed? I'm going to ask that question and I'll give you a take. The bottom line to me is it's a wait and see, but we'll get into the specifics of what I'm looking for to indicate that it has. Let's see. So I'm getting a little bit, getting a strange reaction to me trying to change the slides. Hang on a second. All right. There we go. Oops. Sorry, it's relying on my touchpad, so it might be a little quick at times. Just quick marketing. If you're interested in the service, check the QR code on the left. We do 2-week trials for not just crypto servers, but the entire site, which has all sorts of goodies. I started as a member myself before joining the team, and we don't take any credit cards, so there's no worries about it lapsing. So you can just, if it's not for you, no worries. You just let it go. And then on the right, there's a QR code for presentation. I'll come back to that one when we get into the Q&A. But if you're old school, you can also email Tom, very nice gentleman, at info@ElliottWaveTrader.net, and he can get you a copy, and I'll send that to him after this is over. This is going to be a little shaky, guys. I don't know why my mouse is not working, so just pardon that. But I got a good introduction. I won't belabor that. There in the presentation are a few of my bigger calls, history. I don't want to read through all of that. You can see it there. And then just leaving you with disclaimers. I'm going to talk about the case for Ethereum. Now I'm trading it tactically. That doesn't mean it's right for you. Take this as an educational presentation and do your own research. I think mainly, the main thing is with crypto. If you're not familiar with it, it's a very volatile asset class. To me, that's a gift. I love volatility. It's important for making big profits, but for a lot of people, you got to have a special both financial and emotional capability to handle that, basically. So it really is a personal choice. I'm going to do, if you're familiar with my presentations, goodness, I'm sorry, guys. I'm going to do all my work based on the Elliott Wave theory, which T.S. Eliot came out with this theory in the 30s and predicted the very long stock market run that is pretty much underway now, although we've had some lower degree bear markets along the way. And he suggested that trends move in 5 waves, and then they correct in these 3 waves. So wave 1, 3, and 5 are move a trend forward. 2 and 3 correct it, but in 3 waves. And then those motive waves, 1, 3, and 5 are also subdivided into 5 waves, which makes them fractal. But the more important thing to me in trading is that these waves tend to have a mathematical relation to each other. It's not that we can quite predict it, but what we can do is identify key pivots based on our view of the structure, and then watch for price to react in those levels. And that makes for very clear risk reward design and trades. There's some context to this. Before we talked Ethereum, a couple weeks ago, I talked about Bitcoin, and there's some important context that may help us here. One, as I had said in that talk, that Bitcoin had made a $500 breach of 16K. That was the key level of support, which portends a longer bear market. In fact, I've already started to work off a more alternate count because it was breached. Although since then it's rallied a bit, and so basically we don't have what I call sustained breach, and therefore it's possible that this count continues to live. The sort of partner count in Ethereum is this move to 10,500 in black. And so while Bitcoin, if it does continue to rally, maintaining that 15,500 bottom in, I think it was November, then it has a chance to climb up to 125 directly. It'll get there eventually, but the question is whether it's more direct or not. And sort of the twin trend in Ethereum, or approach in Ethereum, would take it up to 10,500. And again, all these are based on the mathematics or the mathematical structure of an Elliott wave count. If you look at this chart, and this is what I did not bring this presentation, is the alternate. I'm working off of Bitcoin. If it turns around, breaks 15.5 again and goes lower, it should head towards 13K. And again, the sort of twin approach here in Ethereum is that it would drop into the 300s. There's a chance it holds 675, which is next key support, but breaking that takes it down to 300. But there's something extremely important about this chart that is very different from Bitcoin's chart. And that is that the low in the Ethereum chart is not November, it is June last year. And so we basically essentially have, hopefully you can see my cursor, essentially have a higher low in this November low. And so, and basically, so the question here in the Elliott wave perspective is that a wave 1 and 2? The bottom line is that it's not terribly clean. And, but, as crypto becomes sort of more normalized, we notice that the patterns get less clean. It used to be that crypto patterns were the cleanest structure. I mean, even Avi Gilbert, familiar with the founder of Elliott Wave Trader, who I work for, when I first started running the service, he marveled at the clean structure that crypto got, because it's a very pure sentiment-based market, which is ultimately what Elliott Wave is tracking. It's sort of the sentiment of a market. And so we have less clean patterns, but there's still a potential that we have this 1, 2, and of course naturally that projects to 3, 4, and 5, which takes up 10, 5. Okay, so that is the question right now. And what that leaves us with is how critical not just 675 is in this chart, but that $1,000 low in November. Because if that goes, then we basically lose this higher low. So we can use that as a very key level. But I'm going to take us in tighter, and we're going to look at some other things we can watch for in the micro count, which this is zoomed into a 2-hourly. I took this snapshot this morning. Even with Powell kind of shaking up the markets, Ethereum didn't shake too much, so this is at least still valid after Powell spoke this afternoon. In this view, as you can see, I'm tracking 5 waves coming off of that November low. November low is back here on the left. The wave 1 ended here, but so that would mean that I think it was about roughly 1,000 that we had that November low. And I'm tracking 1, 2, 3, 4, 5. The reason I've got a blue overlaid because there's a really strong chance we take a very direct dip into a deeper wave 4, which is actually what I would want. Nevertheless, I do expect this move to take us into the 1800s unless support here at 1400 breaks, okay, or 1420 more precisely. So as long as 1420 holds, we get a pretty good 5-wave structure. Again, 5 waves is how a trend begins. Unfortunately, in context to that large chart I gave you previous slide, this 5 waves could be the C of a B wave. So that leaves us with still a little bit of nebulousness in the chart. And then the ultimate test of the bullish structure will be this wave 2. And that wave 2, we don't know where it's going to land exactly, but we can estimate it using a top of 1800. And they typically fall in the 618 retrace of the 5 waves. I don't mind them as deep as 764, and actually it's very frequent that markets do take it that deep. So it'd probably be roughly around 1300. Again, estimated. I'll get priced just like I have a wave 4 box because that point is known. As soon as I have a known point, I will add a blue box for all of my subscribers to the wave 2, and that's where we take the highest or the best risk to reward trade in this setup. Tactically speaking, you can range trade here, and some of the I definitely do it. Some of the subscribers do, but in my general sense, my general recommendation to people, again, well, I can't call it a recommendation, but my general the general principle in Elliott Wave is to take most of your trades in the wave 2 once you have a very clean 5-wave structure in the 1. And so that at least gives us a good trade. Whether it breaks or not is irrelevant as long as our stop is very tight or position size is kept small until we get closer to that stop, which again may be close to 1300. So that's the bottom line. I mean, just again, I'll go back to that slide too, just because it's all pretty simple. Get there without jiggling. It's all pretty simple. We don't know yet where this market stands. but we have, again, a pretty interesting setup with the higher low in November. But now it comes into the testing zone, whether this is going to be this red B or this black count here. And again, we are completing 5 waves, it looks like. Looks like we'll get there, but it can be a C wave. That is a very valid interpretation Elliott wave wise. But again, if we hold the black 2 afterwards, then it's clear. Holding that black 2, breaking back out over the black 1, and we're on our way to 10K, or should be. You know, I'll have all their alternates along the way, but it's a very high risk reward trade. I should say high reward for the risk taken at that trade. So to go on, again, takeaways: Ether has more bullish chart, a daily chart, than Bitcoin, but can follow Bitcoin lower if support breaks. And again, that key support is 675, well, 1,000 and then 675. My 10,500 target doesn't change until 620 breached. And again, that 10,500 target has been around for quite a long time if you're familiar with old presentations, whether it be live or virtual at the Money Show. The current push is critical. I mean, again, this whole area that we're in, if we hold wave 2 at about 1,300 after we finish those 5 waves, we were likely in a new bullish trend. Below that, the bear continues and can take us down to 300. Just going to review my tactics again. I mean, when you're in wave 4 and 5, they tend to be extremely choppy. In new subscribers, generally say, just to get used to wave 2s. As you get more experience in Elliott wave, you can kind of scalp the force. So like, I'm just basically position size down, kind of scale in as we get closer to support, scale out as we get above support. And it's really scalping, but you can get a lot of return. In fact, one of the things I've taught people about that is a great invention in crypto market is a grid bot that you could turn on from some simple services, and it takes care of that for you. Granted, you got a ton of taxable transactions, so you got to stomach that. But it's a pretty nice way to make some income as long as you know where support and resistance is. I literally wake up in the morning and the bots have been running. And anyway, as wave 2 forms, again, after the 5 waves, we'll scale into more aggressive trades. That range, again, 1,300 support, that wave 2 can, I'll have a blue box. So we have a pretty big range. But again, what we do is we pyramid our positions. So if you're at the top of the box, you're far from the stop, take it really small. Then as you get closer into support, you kind of pyramid the position larger, and then you've got it really tight to support. And then it's a very low risk trade compared to the potential return. Again, say you can risk a total of a couple $100 for a potential gain of 9,000 if we take it all the way to 10,500. I mean, it's a credible ratio, or skew as we call it, high risk reward trade. And then again, if Ether breaks 675, I personally will go back to DCAing, dollar cost averaging. Just dollar cost averaging to me is a very slow affair. Don't take a lot of risk in it. It's just building up that long-term position. And I tend to put that in cold wallets. I have it off exchanges and all of that, which is general recommendation nowadays with the recent events. But we'll see how it gets there. Again, I have, as personally trading, I devoted from emotions to whether we break 675 or not. To me, it's more about what are the tactics, right? And so this is what I'm offering you here, and what I do every week with my subscribers. All right, that is it. I hope that was all pretty clear and simple. Let me know if you have any questions, and then I'm going to take it back. Let's see if I can get it up there. Take it back to the QR code so you can get a copy of the presentation if you like, so you have all these info. Oh, let me say one more thing. I expressed this in the last webinar, the last virtual conference. If you follow me on Twitter, and the username is RWILDAY, so first initial, all of my last name, I have been holding a weekly public webinar, third Saturday is what I go for. I do reserve the recording for paid subscribers, but and it is usually, well, it's generally been at 11:30 Eastern time. So I would look for that announcement on, I think I have a conflict this month, I have to verify, but I would look for those announcements on Twitter. I usually announce a week before and give the registration code out earlier or a week before, and you can get a seat. That's a good way to actually just check out what I'm doing on a weekly basis with subscribers, except for on the board, and then you get a flavor if you're not in the mood to sign up for something that you're that is more for or only for traders. You can just get a feel for it in the webinar. All right, with that I'll take questions.
Okay, there are not a lot of questions in. Maybe some people will chime in. We do have one question. Anyone else, please feel free to type that into the chat box. Ian just wrote, hi, Ryan, if ETH breaks 675, what does the long-term future look like for Ether? Going to zero?
No. I mean, there's another big support area in that 300 region. It's a chart. I don't bring that up because the chart is going to be a sort of a little goofed up and going to need a lot of work. But it actually, because Bitcoin going, and I expressed this in my last presentation, if Bitcoin drops to 6K to 11K, its target actually increases because it makes the degree of its bear market a higher degree. Elevated speak, I mean, all this is fairly academic. Although, and I have a million target if Bitcoin drops that low, but that million target will come with several lower degree bear markets along the way. So it's not like, okay, next year we're going to be at 1 million. There may be people out there that say that. I would say a million maybe in 10 years. And so we will be looking at a multi-year bull market with lower degree bear markets internal. Ether will do similar. I think it actually would be up in the 5 digits or something like that. But again, sorry, it actually in the 6 digits, because my target was 5 digits. I haven't calculated that in a long time, so I couldn't tell you offhand. But again, getting into 6 digit Ether over many years will involve many lower degree bear markets. So it's not like it's an easy ride. So the whole charts will need the Ether chart will need a redo. The Ether chart long term is more difficult because the first wave in 2017 was 3 waves. It stopped at 3 waves. It failed to get an impulse. So if you're familiar with Elliott wave, it's a very large diagonal, most likely, or is just a chart that's going to move in ABCs. That's a far more difficult long-term chart. And to be honest, that's how most altcoins move, and why so many of them fail as well, because they never catch an impulsive structure, where Bitcoin has been an impulse for many years now, 10 years. So
perfect. We also have someone ask, what is your low and high targets for Bitcoin?
Well, eventually, I mean, long distance, a range from 600 to 1.2 million. But again, I'm talking a decade at least. I mean, it may ultimately take longer than that, given that Bitcoin has started losing volatility over time, in terms of like the short-term realized volatility is lessening, but that volatility is being seen over a longer period of time. It's kind of a little bit weird to explain, but so it may take longer than 10 years. And then on the low end Bitcoin, I wouldn't be completely surprised, and I've said this in a recent presentation, to see it drop to 1800. But if it drops through 15.5, I fully expect 6K to 10K. It may stop there. But again, I will not be surprised to see 1800. That will put a lot of miners out of business, by the way. Oh.
Another question, what is your projection? What does it look like if the SEC declares ETH a security?
They've already said it's not a security. It won't affect price because SEC doesn't run the global crypto market. I mean, it might get a little hiccup, but long term, it's not going to do anything to the Ether, because the Ether is most Ether is bought outside the United States, so they don't care about the SEC. Another question: will Coinbase take FTX business? I think they have been. Kraken as well. Kraken's a non-publicly traded. In fact, I track the Coinbase. We do crypto equities in the service as well, and I track Coinbase, and that is the first time I got a bullish pattern off of a low in a long time. So we're tracking that. It's not the cleanest. Are they taking business? I think that are, customers are really left with 3 choices. You've got Coinbase, you've got Binance US, which has its own rumors and concerns, and then you have Coinbase. And I think with Coinbase being publicly traded and heavily regulated because of it, it's a natural solution. I don't like the exchange because of the fees. I don't like it because of the interface. I hardly trade there, but they may take. But for newer folks, I think it's a definitely good place to go. But that's all I'm going to say versus saying yes, they're going to definitely take business. I think it's definitely possible. Another question: what exchange should one trade crypto? What happens when Binance is shut down? I do most of my trading on Kraken. Unfortunately, to be honest, I love the FTX exchange prior to its shutdown. If it comes back, I will trade there. If it comes back fully regulated under clean management, I will actually trade there again if the UI is the same. And then Coinbase, I mean, yeah, that's all you've got. And I mean, I don't have big issues with Binance US. I have issues with Binance International. I understand Binance US is basically a loosely held subsidiary. So I'd be really honest with you. I don't recommend exchanges. That's a dangerous business. That's the way I've always been. I think they all have risks, to be honest. And I also openly suggest to anyone, including my subscribers, that if you're not trading with the funds, get it off, get into private wallets, just because of what we've seen in FTX.
Perfect. Is BTC in a wave 1, 2 like Ethereum?
No, not at all. It is in if it gets to 125, will be a top to its third wave. It's been going on. We've had BTC since 2009, publicly traded in 2010. Am I got that all right? And so we're talking about a 12-year long chart, and that wave 1, 2 was in 2009 and 10, long time ago. So we're at the latter stages of a move. We haven't gotten the fifth wave yet. The fifth wave should be over 1 million, unless something changes.
Perfect. We did have somebody who asked if you could go over the crypto bot again. I'm not sure if you can do that or not.
Yeah. So there's a grid bot. So there was now I'm going to give you a warning with this. There's a service called 3commas.io. So 3commas.io. Now, before I go into it, they did have some sort of hack where they stole API numbers. They've instituted some new security with that. I was a customer before the hack and after the hack, so please don't take that as a recommendation. I did not have any funds taken, and I certainly have not afterwards, because the security is higher. You need to whitelist, basically with their site. You whitelist your URL onto your exchange. You would not want to use the product if your exchange doesn't allow whitelisting of URLs. But basically, you connect it to the API, and then you just basically set a range. You just say, you could say Ether. I want to buy Ether as it gets closer to 1,300, and then I want to sell Ether as it gets close to 1,600. Then you put a number of orders, how many orders in between, and you let it run. And it's if you look at markets, they go up and down without getting anywhere, right? I mean, the crypto market, if you look at Ether, we can look at my chart. You look at Ether for, this is what it's done for many weeks, done nothing. But with a grid bot, that's all profit, because basically buys and then sells and then buys and sells. I mean, and I don't have one on Ether, but on Bitcoin, I have one with 100 orders between, I forget my levels. I don't have my Bitcoin micro chart between the levels, and so it just pushed out a lot of profit, basically. And so one of the tools, so I introduced the service to it. Again, I don't have any relationship with this service. I just am a customer, and I'm going to double down on just do your own homework on security. But it's a nice tool for basically, okay, we have support and resistance. And in this Ether chart, we have clearly defined yellow and black. This is about 1,700, and this is 1,400. So we can just set a grid bot with a 1,500 bounds on the top and then 1,400 boundary on the bottom, and then let it run. And however, and it's sort of random, right? But that randomness creates profit. So that's it.
Great.
Pretty cool tool. It's a great tool with Elliott wave analysis.
Fantastic. Another question. Do you view XRP as in the group with ETH and BTC?
No, I'm bearish. I'm completely bearish on the long-term chart. It's one of the worst charts out there from the majors from 2017. So I don't have a chart with you. You can't go into details, but I'm extremely bearish.
Okay. Another, a wave 2 would drop $600 to $700. It's quite a lot. No, Ryan.
Yep, that's normal. That's big. That's crypto. That's why I said in the beginning, if you're not up for the volatility, crypto's tough. But I mean, look at this move here from here to here, we're up 50%, right? And that's only, that's since January. So a month, we made a 50% return. If we had bought the bottom, I mean, I never take the very bottom, but have ridden some of this trend up, and that's natural. So, I mean, and naturally, if you don't want to suffer that 50% return, you take some profit, and that's exactly what we do. And so, yeah, and some of my subscribers, they don't trade this level of micro. They just say, well, I'm just going to comfortably have a holding of Ether that I can stomach. And they just, that journey as a trader investor is super key. Like figuring out and learning your own, emotional, wherewithal, bandwidth, financially, and all that, and affecting, designing your trading for that. I mean, I try to teach people how to do that as well in webinars, but I mean, ultimately, I cannot handhold anyone through that process, right? I had to do that for myself over many, many years. And that's the same thing here. And yeah, it's, crypto has swings like 50% down and like 5 up, 5x up, those are normal moves in crypto. And that's, or, down 90% for a year. So we do our best to catch the big turns and to avoid most of it. And then wait for the high probability trades to form. So, yeah.
Thank you. We actually have a couple different people have asked for your thoughts on Galaxy Digital.
I used to show that chart in Money Show presentations live and virtual, and it hit my stop, and I have not looked back since.
All right. How do you manage tax reporting with all this trading?
I do a couple things. I hook up my API to some tax software. So last year I used, or last 2 years, I used Coinly, Koinly. Again, nothing's a recommendation. It worked well for me. And at the same time, I zero out my active trading accounts every year. So for win or for loss, I have a zero level, just straight USD at the beginning and end of the year. So I have a bottom line number to check against that software and deal with errors. So that's how I do it. It works for me. I haven't been audited yet. Maybe I'll eat my words someday, but I do my best to be honest.
Perfect. I do have Jerome who asked a question earlier, and he said, Ryan did not get my question well. BTC is in a subwave 1 of the 5 of 3, right? So is it heading up? Not sure if that makes sense.
As I said, oh God, I didn't realize you're talking about this. Again, this I would look at the past Bitcoin presentation, because this is only valid if we hold that low. That's it. Yeah, if we hold this low and we finish 5 waves, which it looks like it will, then this count is valid. But as in my presentation, which was only a couple weeks ago, maybe Money Show has it on YouTube, I don't know. But if this doesn't hold, this 1500 doesn't hold, it's going down to 1300. That actually changes the entire count. It moves we're not even going for this 3. This 3 potentially topped earlier. So it really depends on that 15,500 low that we hit in November.
I think we're almost coming to an end. Is there anything you want to sign off with, Ryan, on your end?
No, I would just emphasize, I'll put it back to QR codes in case someone hasn't got it. I would just emphasize, if you're interested in this work, just come check it out. We're not a hard sell organization. You're not going to get a phone call. You're not going to email. You don't even have to put your credit card in to check it out. And if that is intimidating, which, again, it's for traders and long-term investors. If you find that intimidating, join a webinar. I mean, just check out my Twitter feed for that Saturday webinar. And again, I shoot for the 3rd Saturday of every month.
Perfect. And everyone, I guess that concludes our time for this session. Thank you all again for joining us. And thank you so much, Ryan, as always, for your very insightful and educational presentation. To our viewers, please stay tuned as we have a lot more in store for you today. Thanks again, Ryan. Thanks to all.
Thanks, everyone.